If that's the backdrop, and this is a sign of things to come, is it just time for IPO go? Let's get the read from market watcher Doug Kass. Doug, what do you think? A lot of people say that if companies are nervous about the environment, they shelve their offerings or delay them. They're piling up like, planes at LaGuardia right now. So obviously no one has been dissuaded, or not as many as you would think. What do you make of it all?
First, let me say, unlike Theresa May, you have my total vote of confidence, Neil.
They don't appreciate my wit, Doug. I don't know what it is, but they're not the only ones.
I do.
All right, there you go.
I do, and I'm honored to follow my old pal Charlie Gasparino, who I've been sharing white wine and red wine and stories for 3 decades with.
That's another show right there. But
I would say that is a show, literally and figuratively. I would say the Uber and the Lyfte IPOs. When you get unicorns valued at maybe over $110 billion, in the case of Uber at least, it's not necessarily a sign which characterizes the early stages of a bull market. On the other hand, if we look at prior shining objects like cryptocurrency or CB radios or mobile homes in the early 70s, mid-70s, which characterized market tops, I don't think you could see that causation.
That's a very good way to look at it. Doug, what I tend to remember, it's a little apples and oranges here, but with the failed leverage buyout at UAL, I think in 1989, that caused like a little crashette at the time. We were down 189 points that day because it just didn't work out. And there were some thoughts that maybe the market had gotten ahead of itself. Now, we know what happened afterwards here, but I'm wondering if lightning could potentially strike twice. With a lot of these companies are getting greedy and cocky, and there are going to be a lot of disappointed investors.
Neil, look, at 103 months, this is the second longest running bull market in history. The longest was 110 months between 1990 and 2000. The average of the 7 greatest bull markets lasted 71 months. And interestingly, in the 6 bull markets, the current bull market, the average decline from the peak was 51%. So while I turned bullish and covered all my shorts late last week, seeing something of a selling climax, a capitulation low, improving divergences, positive divergences, like new highs were expanding and new lows were contracting while the market was declining. I am very concerned after this year-end rally. I'm positioned bullishly now, but I see in 2019 a bear market and a recession. I would also add one thing. In confirmation of this rally, this year-end rally, in terms of the internals, when I left my office today, there were 2,000 net advances on the New York Stock Exchange. That's taking netted long advance stocks that are up, less stocks that are down. And the last time that happened was early October, and that led to that big whoosh higher to new all-time highs.
That's interesting. So we could have a little bit of frothy, frenetic finish, but then go kerplunk, I guess. We shall see. Doug, thank you very, very much. Good seeing you.
Thank you, Neil.